than that to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com. Want good investing advice from someone you can trust? Listen to Phil Grande.
With what's going on today in the economy, especially in the stock market, it gets really complicated, but it doesn't have to be. My job is to make it simple, to get through the fog. And I think I do that, and I think I do a pretty good job of that, especially why you should be buying a stock, or why you should be in the market or not in the market, or shorting.
Invest wisely with the knowledge of Phil Grande at philsgang.com. Good investing means understanding how the stock market works.
Hi, I'm Phil Grande at philsgang.com. If you really want to make sense of this market, you can't be listening to the fake business news network. They will not tell you the truth. They're to get you excited, to make sure you go out and you're happy so you'll buy something. That's not what we do here at Phil's Gang. We give you the truth, the direction, and that's what you need. Listen to me on my radio show each day and also on my Rumble and YouTube channel podcast. philsgang.com. That's philsgang.com.
If you invest in the stock market, take a moment for this important advice.
Hi, I'm Phil Grande at philsgang.com. You've got to stop listening to the fake business news networks because they tell you what you want to hear instead of what you need to hear.
Phil Grande guides you step by step on investing.
You're going to know exactly what the tone of the market is. Do I sell? Do I not sell? Do I buy?
All you need to know is philsgang.com.
Check it out. philsgang.com, philsgang.com.
With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG.
I've been a Phil's Gang member since 2014. Over that time, I've generated over six-figure profits. Following Phil, his charting system has really been a huge impact on my career and my life. I would recommend Phil's Gang to the mom and pop out there. I would recommend it to parents teaching their children. I would recommend it to grandparents. If you really trust in their system, you will do well.
For more information, go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. Over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. I have a team comprised of successful investors, all with proven track records. And the Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
The consumer is actually...
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And welcome to Phil's Gang, my podcast and radio show. So, today we're down over 800 points. What's pulling down the market today, the stocks, we'll take a look at them quickly here, is American Express. Now, it hasn't broken the 200-day or the 50-day moving average. That's when it's in trouble, and that's when you would start shorting it, by the way. You gotta have the shorting skills. You can't make money in the stock market by just trying to buy stocks. Nobody's that good. So you got to have the skill to short. So American Express, I would short that if it breaks the 50-day moving average. Visa, I would short that, again, if it broke just a little bit around, I'd say I'd short that around 330, 338, 339. That got hit hard today. PG, that got hit hard today. It's below both moving averages. And Coke, Warren Buffett's favorite, that hasn't gotten hit too badly, but it's down. And then, of course, Walmart, which we've been short, that's just starting to really tank. And another stock that we've been doing very well with, we started a short on, was McDonald's. So that should, once that breaks through the 200-day moving average. So that's what's going on. So you got a handful of stocks that are taking down this market, okay? Now, but here's what's interesting today about gold. We've been in gold for a long time. One of the questions, the most asked question I get, the first one is, what do you think the market's going to do? I've been getting that question for 50 years. But the question that I get the most really is, besides that one, is which should I buy? Should I buy gold or should I buy the gold bullion? And it's always the miners, okay? In other words, the question always is, maybe I should be in the miners or should I be in the bullion? The answer is miners. They always outperform the bullion. They always do. And again, it's just that the miners, even though gold is a hedge against inflation, I get that, but the miners, okay, just historically outperform. And they get a bad rap for one reason, because anytime you get a big spike in gold, the bullion, what happens is the gold will go up, but when you get that spike, but not the ETF, GDX, the miners. What happens is they'll pause first, but then they catch up quickly as buyers start coming in and flooding in, so they start picking up, and then they, boom, outperform the gold bullion. So keep that in mind. Again, they're both good. There's no question about it. But also remember, you got the GDX, which is the miners, and that's they follow the miners. And remember, one nice thing about the miners over the gold bullion, the miners have a fixed cost, just like oil rigs when they're drilling. And so if you get a good bump in gold, they make a lot of money. Their earnings go up big because they got a fixed cost in mining. So that's another reason why miners are better than gold. But you got a good choice. You can either go with your two different ETFs. You can go with the GDX, and that, again, will follow the miners, right? Or you can go with GLD, and that follows the gold bullion Okay, it follows the actual price of the gold bullion. But I would never be buying gold, the bullion, because it's too cumbersome. You got to find a place to store it. Got a place to find it where it's secure, and it's not hard. I mean, it's very hard to sell gold if you got a bunch of it. It's not that easy. You think it is. You think anybody would buy it? No, it's really hard. So if you just buy the miners GDX, which is an ETF, and those always do well. Or as I said, GLD. Matter of fact, GLD, we've been in GLD. I'll show you on my chart here. We've been in GLD now for, let's see if I can get it here. We've been in GLD. Here we go. I'm going to turn from, I'll move it back here. I'm going to turn from red to green right here. We got in around January. We got in between January 17th and the 29th, and we've been in it ever since. We're up about 28%. And so that's, again, GLD. That follows, it's an ETF, and that follows directly the price of your bullion. So either one of those, my answer is either one of the ETFs are just fine. And you're going to do, and they're just so simple. But I'll tell you the other reason why I like GLD ETF, which follows the gold, or GDX, the miners, because think about it, we've been up now about 28%, 25, 28%, but if it starts to drop, I can turn around and sell it short. I can sell it short. That's the cool thing. So, and that's why it's terrible when people don't know how to sell short. They get in a stock and then they don't take profits on the way up. They get greedy and they just don't get out. They never take profits. They never set stops. And then when it's going on its way down, they get into an area of where they're just totally in denial. Oh no, this is a good stock. Oh, this is a good stock. It's going to come right back up. It's a good stock. It's going to come right back up, right? So that's why I like the ETFs, because you can sell them short. So that's what's going on with gold, and gold's doing really good. Our GLD is starting to break out. You can see it right here on the chart. We're at 316.66, and we bought it an average price. We bought it around I think it's around 253, somewhere 253, 254. Okay, so the what's really is why I think gold is going to go much higher, because there's a lot of fear. There's a lot of fear, okay, in these tariffs. And consumers know that these companies, that they're going to pass this along to everyone. And so, when they bump these prices, it's going to be really tough, because that's a big bump, especially anything you buy from China, right? Your tariff now is 50%. So that's going to be a tough one. And so again, the consumers got a real battle. And what was funny was that the jibber jabbers keep on telling us how strong the consumer is, right? They're really strong, and they're in good shape. Here, listen to this one here. I'll show you a little cut. This is funny.
The consumer is actually in okay shape.
Okay shape, yeah, really? Okay shape? No, he's not. No, he's not. Matter of fact, this guy's nuts, because think about it. Let's talk about cash outs. People taking money, the equity out of their home. It's going up much faster today than during the 2009 housing crash, during that bubble. Imagine that. So, and the reason is this: their credit cards are tapped out, and they don't want to be paying that 22%. And also, they keep telling us, hey, they're doing pretty good, aren't they? Yeah. Well, how about the auto repossessions? The highest in 17 years. Credit card delinquencies, the highest in 30 years. Corporate bankruptcies are up 40%. That's the highest since 2008. And personal bankruptcies are up 24% over 2024. In mortgage payments, we haven't seen mortgage payments this bad where they're past due 90 days. It's the highest since 2020. And this is what it was really crazy. This is a huge number. 1 in 7 contracts for a new home, for a builder home or a resale, okay? People are walking away. 1 in 7. We haven't seen that. The last time we saw that, it's even worse today, was during the housing collapse in 2009. So again, the consumer's in tough shape. So when you hear how great we're doing, no, it's just not true. And what they're doing is they don't tell us the truth, and that's why you got to follow the pricing of your stock. Follow the pricing. Don't follow the noise. Don't listen to the jibber jabbers, because a good example. Take the payroll survey. Okay, it says we gained 139,000 jobs in May. Yet the household survey, which is so much more reliable because of the broadness, in other words, it includes, when they do their study, it includes self-employed workers, unpaid family workers, I mean, on and on, ag workers, household workers, private household workers. I mean, it's just broad. So think about this. Maybe they say, oh, we're doing good. We gained 139,000 jobs. But the household survey says we lost 600,000. We lost 600,000. We didn't gain the 139. We lost 600,000. And from the beginning of the year, we're down. We've lost 1 million jobs. We haven't gained any. But that's not what they're telling us. They're telling us, hey, everything's wonderful. The consumer's strong, and are gaining all these jobs. Always go to your household survey. That's the one where the proof is, okay? That's the proof. 600,000 jobs, think about that. Now, that kind of makes sense. If the 139,000 was truthful, then why is it that the cash outs on home equity are rising faster today than back in the housing bubble 2009? Why are the personal bankruptcies up 24%? And the auto repossessions and the credit card delinquencies. Now, that matches the 600,000 jobs lost. They're just not going to tell us the truth. They never do. Wall Street never does. They don't tell us the truth. So always look at your household survey. Never listen to these jibber jabbers on these financial shows. And the other thing that's going on is that earning estimates. They keep telling us how high earnings are. Earnings are terrific. Earnings are really doing good. Earnings have gone down. They plunged 1% so far. So you can't say on one hand, boy, earnings are really terrific. Look how good they're coming. But the earnings estimates are plunging. So how can you claim that? And I mean, this is insane. And you can't have a country doing good that's paying $3 billion a day in interest just on one payment on $7 trillion we borrowed for Biden so he could go do whatever he wanted to do. So again, every day it's important that you follow your money. Okay, that's called pricing. Follow the price. If you follow the price on your chart, just like we do. And then we have an advantage because our charts, we developed our own charts called the Pro 2 chart. And it assists you. It assists you, whatever charts you have, because it tells you if money's going into your stock or money's coming out. Or it tells you, let's say money was coming out, or let's say money was going into your stock, you're doing good. All of a sudden it'll turn yellow and that tells you, it's turning, money's coming out. So, I mean, it's not something you sit back and say, oh, gee, if it's green, I just buy, or red, I just sell. No. It assists, it works with your chart and what confidence it gives you. And as I said before, since 25 years ago, over 225,000 people use it, and they love it because it really helps you with your confidence. Now, so the other thing is, they told us how great the retail sales were. Right? They're telling, boy, retail sales were great. No, they weren't. I'm talking about in March and April. No, what happened was it's called a pull forward. What they did is when Trump announced he was going to do these tariffs, you had corporations, and you had corporations, and you had individuals running around buying. But now what's happened is the months we're entering going forward now, there's no buying. Sales are collapsing because they pulled it back. Join my gang, free for 10 days. We'll see you on the chart.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When the stock market is volatile, how do you invest intelligently?
Hi, I'm Phil Grande at philsgang.com. There's no need for you to be panicking in a market that goes up 800 points one day, 700 points, then it goes down again. All you need is good advice, need good direction. You don't get that from your CNBC and the Fox business and all these crazy shows. You don't. Here's what you get from them. Thank you, Jim Cramer. But this is something that this really bugs me. Listen to this.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What? Their responsibility is to their partners and shareholders and not to you? Check my site out, philsgang.com.
When the stock market is up one day and down the next, you need the experience of Phil Grande at philsgang.com.
What a difference it makes in your financial life. philsgang.com. It works.
Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang podcast radio show. Oh boy. So, it's interesting. These people in Washington, these people on these financial TV shows, I call them jibber jabbers, they're disgusting. They either are just, they totally don't know what they're talking about or just bold-faced liars. But to tell us that the economy is really doing well, okay, it's just insane. How can you have an economy doing well when we got historic numbers, negative numbers on credit cards and so forth? It's just terrible. And again, always trust your household survey when they give you those numbers on Friday, the first Friday. That's what they really lie. They really lie. Okay, like I told you, in May they said we had 139,000 new jobs. No, we didn't. Just like in April they lied. They said we had 177,000 jobs. No, we didn't. We had a negative 75,000. Negative 75. And then they turned up the birth-death system they have, which they just guess. They look around and say, okay, let's say in your county, five people filed for their corporate papers to start a corporation. They just guess. They'll say, well, they're probably going to, whatever number they need, they're going to have 75 employees. Let's put that down. And let's say it's just going to be ma and pa and 2 kids. So they'll lie and they'll just put the same. So always believe your household survey because it's more broad, all right? And that's why it's so important that we work with the pricing, with charting, because if you follow your price, okay, you'll always be making money. Like today, I've been telling my members, this is a great day. Okay, we're down almost 800 points. It's because now we're going to find which of our stocks are good stocks, have relative strength. When the market goes down like this, now the stocks that don't go down, they tell us those are the strong stocks. Those are the ones we'll keep. The other ones that go down with the market today will sell short, and that's how you make money. Okay, but you got to have that skill of selling short. Listen to this nonsense coming in here. This is Yellen. She's such a fool.
We have been on a path, absent the tariffs, in which inflation is returning to the Fed's 2% target.
You've got to be kidding me. Would you believe anything she says? We're nowhere near 2%. Inflation's not 2%. Anyone can tell you inflation's 2%? What are you, nuts? Everyone knows our inflation's double digit. But they're not going to tell us the truth about inflation. And then this is the one I like, Elizabeth Warren.
Even Elon Musk and the Wall Street Journal are criticizing the bill for ballooning the national debt. The only people who are saying publicly that it's not going to add to the national debt are you, Donald Trump, the Republicans in Congress.
No, that's not what they're saying. They're saying that if it works out where if they give a tax cut to the wealthy of $5 trillion and they take that money and use it, okay, to bring their manufacturing back here to the United States. And that's why he's doing this tariff. So he's saying, you guys got to start making your sneakers here in the United States, not in China, then send them over here. So I'm going to stop that because I'm going to charge you 50% when you go to bring them into the United States. So why don't you come here and manufacture your sneakers here? So what he's saying in the long run, if I give these people a tax break, then they should take that money and they'll do their manufacturing here. They'll invest it here. I'm going to give them an opportunity to do that. Now, will it go on the deficit? Sure, if it doesn't work. If you can't get people quickly to come in and say, okay, I'm moving my manufacturing from China over here to the United States, yeah, then it's going to be right on top of the deficit. But at least he's trying to do something. What have you been doing all the years you've been in Congress, you dope? I mean, she's done nothing. She's done nothing. So again, this idea all is on the premise that these multimillionaires will use that money, their tax money, their break, their own personal money, to increase productivity here in the United States instead of China, wherever they do it, in Vietnam, whatever they do it. Okay, and that's how we're going to increase our productivity. Prices come down. But I got to say this. I don't think it's going to work. And I would never want to bet against Trump because you'd always lose. But I've been around long enough for this business, okay, for over 50 years. And the one thing I can tell you that's always the truth, the rich, the very wealthy, the people going to get this $5 trillion, they never spend their own money. They put it in a pile with the rest of their money, and they use everybody else's money. They go to Wall Street to get money, and they're not even liable for it when they borrow it. They don't have to have a personal signature on it. So I just don't see that. But it irritates you, someone like Elizabeth Warren, who's done nothing since she's been in Congress. There's nothing substantial. Give the guy a break, okay? Give him a break. Then we got this guy.
We're going to have growth, some growth stability, sluggish but stable.
No, you're not going to have if this thing doesn't work, you're not going to have any growth. We don't have any growth now. Our GDP, we don't have any growth. It was negative. And look what they did in 2022. We had 2 back-to-back quarters negative. And for 100 years, that's been determined as as recession. And what did they do? They came out and said, matter of fact, it was Yellen came out and said, well, it's not a recession because we got tremendous jobs. We got 400,000 jobs we're producing. And that turned out to be a lie, remember? So they always use this jobs number, right? I mean, to say that, we have these two back-to-back quarters and there's no recession because of these job numbers. This is why you can't trust them. You got to follow your money. You got to follow the pricing on your chart, and then get the skill to short besides having the skill to buy. Now, another thing that's going on that nobody wants to talk about is the amount of quits. They've been cut in half. The amount of people who quit their job been cut in half. Okay, so that's a big deal because that means people are scared. Because they're seeing that when people leave in their company, they work for a company, and they see somebody leave, they're not being replaced. These people aren't being replaced. Companies aren't replacing them. So, and that's a good thing to look at is the quits, what the quits are doing. Because if you have a lot of quits, then that's telling you the economy's better. People are feeling good and comfortable about themselves. They feel they can find a better paying job out there. There's job openings. But when there's the quit rate cut in half and people are scared and they're holding on to their jobs, don't tell me when you say, hey, we got a good economy. No, you don't have a good economy. It doesn't work like that. And the one reason we don't have a good economy, and again, I know I keep repeating myself, but again, if you don't have a good economy, it's okay, because you're going to make money in the stock market when it's not a good economy, if you short. But if you're going to sit there, and a lot of people have in the last 14 years, 12 years, been depending on seven stocks, been carrying this whole stock market. And they've been lucky. They've been making money. But guess what? 2024 was a banner year. But guess what now? 2025, I think only one of the seven's making money. The Magnificent Seven. 1 out of 7. And that's quite a metaphor. Whoever came up with that Magnificent Seven, remember the Western movie Magnificent Seven? The metaphor is that at the end of the day, in the movie, remember it was ended, out of the 7, only 3 lived. So I don't know how many of these tech stocks are going to live out of the Magnificent Seven, but we'll see. So, and this thing was terrible too. That when Trump turned around and said, "Okay, we're going to do these tariffs," and then people got fearful because remember that he was going to do 140%. Remember that? So people started to what they call pull forward. In other words, pull forward simply means that what companies used to do to try to build their profits up, they know they're going to have a bad quarter, they'll convince you through marketing, you better start buying now, you better start buying now. So what happens is you start buying now, which you weren't thinking about buying now. You're thinking buying maybe 2 months from now, 3 months from now. Say it's a boat or motorcycle, whatever. But people get convinced you better buy now. And corporations do that so they can show, their earnings up, and otherwise they would have been down. But the problem with that, called pull forward, you're pulling that business forward. Now we just reached the point where our retail business is horrible. Retail business, it goes down, just look at it on a chart, it's going down a straight line. Because we convinced everybody, hey, you better buy now before the tariffs, and they did. But now we're here. And we already bought the stuff. We don't need it now for the next couple, 3 months. So that's why I think you're going to see the GDP be negative again. But then they'll say, well, but we got good jobs, so don't worry about it. We don't have a recession. But the point with that, what I'm making is when you're usually, and I'm not saying he did that on purpose. I'm just saying when people got scared and they didn't want to pay, instead of $20,000 for a boat they're going to buy, that same boat was going to cost $30,000. Everybody went out and bought, right, early. So, but that's not good for the economy. But that's what happened. So there's no good news in the economy. And when she starts talking about, this crazy how inflation's down, it's not. So what do? Well, you want to stay with your stocks, okay, and that are your strongest stocks. And you say, well, that's common sense. Well, most people don't. They don't even know what relative strength is. They don't know what stock groups to be in. They don't know which stocks to follow the money. They don't know how to follow the money. They never even look at their volume bars. If you're going to buy a stock like Procter & Gamble and somebody comes on TV or Kramer says, buy Procter & Gamble because they're opening up 3 more, got some new toothpaste or some damn thing, right? And I better buy it. But if they went and looked at a chart and looked at the volume and looked to see if it had relative strength or relative weakness, what a difference it's going to make. You see, the reason that 85% of people in the last 50 years lose money in the stock market because they're not willing to learn. And the only people that are making money are that small, tiny group. And the trick is they're staying with no more than 6, 7 stocks. And that's the trick to it. And if you stay with the same 6, 7 stocks, let's say 6 stocks like we do, and the first quarter, remember, first quarter when the S&P lost 7%, we were up 5%. I mean, just the opposite. We were up 7%. They're down 5%. So the first quarter, we were up 7%. We beat the S&P by. But we're only in 6 stocks. But remember, those 6 stocks, we were shorting. So if you don't know how to short, that would have never happened. So the S&P lost money because nobody shorted it, but we made money because our 6 stocks, the ones that were down, we were able to short. See, trading isn't a difficult thing. It's all about discipline, and it's all about closing your ears to the noise, okay? So join my gang. Go to philsgang.com. It's free for 10 days, and at least take a look at shorting. It's not hard. It's not hard to do. Okay, see you next.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to